All right, you ready? In Al, what's going on?
Living the dream, baby. Look at you. Sun's a shining outdoors, living in paradise, kid.
Welcome to another episode of That Mortgage Show. It is June 19th, otherwise known as Juneteenth. It's a federal holiday, bank holiday. So we're here doing a little show on a Wednesday. Not too
Yeah.
shabby.
Got some exciting stuff coming up. Abs coming home, baby. The boys are going to be reunited. Had to throw that in there. Very
Yep.
exciting.
Hopefully we'll do a live recording of the show. Um,
Probably.
but why don't we get right into it? Start them off because it is hot out here. I don't know if you can see the sweat gathering on my brow,
I see
but
this one on the brow.
it's happening. It's
Moisture
it's
on
a
the nose.
balmy. It's like 90 degrees here at 10 a.m. So no big deal. It's just a little
You
hot.
move there. You move there,
Speaking of
buddy.
hot heat, let's get into what's your rate. Had a big
Drew.
week last week. A lot of economic data. The Fed met. Federal Reserve met for one of their yearly rate decision meetings and decided to maintain the federal funds rate at 5.25 to 5.5, a level that has been maintained / held since July 2023. So we're coming up on a year of no rate movement from the Fed.
Yeah. Yeah. And this one really wasn't surprising. They told us in the last meeting we can expect several months of no decisions before they actually start making decisions. So,
Yeah, and they echoed that this past week. Jerome Powell actually alluded to one possible rate cut this year, which is a big scale back from the earlier forecast of 3 rate cuts. The adjustment reflects the Fed's ongoing efforts to manage inflation, which has shown signs of easing recently, but not enough to have the Fed make any moves.
no. And if you turn on your TV or open up your portable device and you look at any of the news articles, you're going to be hearing the same old slogan that they've been throwing around for a while now: higher for longer, higher for longer. They're just punching it right into your brain. Just get it in there so you don't question it, you don't think about it. Just know higher for longer, higher for longer.
They know what they're doing, with those phrases.
They know what they're doing.
Uh,
Yeah, it's
they know
repetitive.
yeah, it's just we are simple creatures, and if we just hear the same thing over and over, it's just like Anyway, the decision to hold rates steady comes amidst signs of the economy achieving a soft landing. Another one of those little phrases they love, soft landing. Citing last
Softly.
week's PCE and CPI data, which indicates inflation is being controlled without significant harm to the labor market. So the Federal Reserve kind of feels like things are going in the right direction. It ain't broke, don't fix it. Perhaps is
Mm-hmm.
where they're leaning.
Yeah, flim flam artist ab, snake oil salesman, Federal Reserve chair. What's the difference? It's all the same. You can plug and play any one of those. Okay.
Yeah, they're like
Now,
they're not too far from guessing your weight at the state fair.
it's the truth. That's the next bit, right? I mean, they might as well pull these people. I think they're carnies in a former life. Um,
Yeah.
But regardless, what does that mean to you, Mr. and Mrs. Homeowner? Well, rates are relatively the same, right? High sixes, low sevens. All this higher for longer, one rate cut a year talk. We can pretty much expect minor ups and downs week to week, but we're not going to see any significant jumps. So,
Yeah. I and we've been saying it for a couple weeks straight in the show, but it's like you might be able to catch a little dip where you could save $1,000, $2,000 on origination if you lock at the right
mm-hmm.
time, or vice
Yeah.
versa. If you're a week or two from closing and you haven't locked yet, and you're pressed to
Mm-hmm.
lock, and you do, and it's like there's these little blips where the rates are a little cheaper, and a little blips where they're a little more expensive. So,
Right.
um,
Nothing
but
significant. It's not like one day you're going from 7 and an eighth, and the next day you're going down to 6.5, right? You're not going to see that
right.
much of a swing in the rates, right? You're talking about an eighth to a quarter of a point, maybe. So,
Yeah, exactly right. And that doesn't look to be changing anytime soon. So before we get
Mm-mm.
into our next segment, I just want to real quick. I missed a little bit of the prep here, so my bad.
Miss the prep.
Yeah, I had a little prep I wanted to do for my
You
for the
missed
next.
the prep.
I missed the prep. So forgive me for this lull in the show here, but Al, carry the weight. Say something. Do something. Keep the people
Um,
entertained.
I really don't have much. I wish I had a good joke to tell at this particular point in time. I mean, I got nothing. I have absolutely nothing. O's are hot. Lost a tight one last night to New York, but I think they're going to bounce back next week. All you Phillies fans, sorry about it. Love to see the tears. Um,
But they took over our stadium.
they took over our stadium, and filled it with tears.
All right, here we go.
Suckers.
You ready?
Yeah.
All right, let's get into our next segment, which is just kind of like the headlines. What's going on? What is everybody talking about? So
What's everybody talking
recently,
about?
I came. What's everybody talking about? Everybody's talking about how just everything's too expensive, and everybody likes to complain, and that's a big time. That's an easy one to complain about. So that's don't necessarily want to indulge, but it is in our lane. It pertains to mortgages. So let's dive in. All right. So I pulled up this article this past week. CNN headline reads, "Here is how much household income you'll need to afford the median priced home in every state." Pretty cool little article.
Mm-hmm. Yeah. Nice little
I'm going to share
interactive
my
map.
screen real quick.
Share it.
How's that look?
That's great. I love it. Let's hover over some
All
of
right.
these states. Let's see what we got going here.
All right, Alvin. So you got this guy. I mean, Lord
That
knows.
hair, that is your hair, buddy. You are on that path. I want you to know that.
I was once on that
You
path.
are a barbershop trip away from that.
All right, let's move on from that guy. Okay, so here we go. We got this map, interactive map. Love an interactive map. So let's do a couple states. All right, so according to this article, and we'll get into like the nuts and bolts and the logistics of how they came up with this stuff in a second.
Sure.
But nice, cool, fancy map. Al, throw me out a state. Throw a dart at the map, baby. What do you got? What state do you want to know about?
Let's start in Maryland. Let's start
All
in
right,
Maryland.
Maryland. I hail from Maryland, home of the Terrapins. All right, I drink Bohemian.
Let's go A's.
Let's go O's. Um,
So
all right,
according to this map,
go ahead, take it.
you're gonna need. I can't even see that; it's too small for me to see. Was that 108 and change?
108,257 in Maryland.
Yeah. So according. Oh, nice, great zoom job, Bab. Dynamite drop in, Lonnie. So according to this map, according to this article, and this interactive map, in order to qualify for a loan in the great state of Maryland, right, you're going to need You're going to need to make $108,257, and that is, obviously just on the income side, right? Now, that's to qualify for the mortgage payment. This is what the article is saying: qualify for the mortgage payment, not taking into account any other debts that you might have, how much money you have in your bank account, or anything like that. So just from an income qualifying standpoint, in this great state of Maryland, to qualify for the average home, you're going to need to make $108,000 a year.
Right. And that, yeah, like you said, they're not taking into account your $800 car payment. All right, let's fly on down the coast. Let's head to Florida, Sunshine State. Florida, you need to make, according to the article, we'll call it $115,000 a year to afford a house in Florida. Pretty rough stuff. Let's go through the Gulf here.
Definitely have better understanding of why you're sweating so much down there, Ab.
Let's go over here to freaking Texas. Texas, you can get by with $100,000. It's a big state. They're probably taking into consideration here some municipalities where it's probably not that expensive to buy a house. And then here we're gonna go over to the beacon of hope, let's say, or the state that's just leading the way for the United States. They've got
in so many ways, cleaning up homelessness.
Yeah. Cleaning up, yeah. So if you want to just pump fentanyl into your veins and live on the street and shit wherever you want, this is the state for you.
This is the
Also,
place to go.
yep, if you want to be able to walk into Walmart and leave with up to $999 of anything you want without any type of criminal punishment, you should go to California. It's a great state. It is actually the home state to our wonderful company, so no shots fired there. But in order to live in California, you need to make $197,000, which is really crazy. I mean, I don't know. I don't know. Whatever.
Yeah, I mean, or you can just live in one of the homeless encampments that they buy up for millions of dollars, and basically $1 million just for, I guess, to house one person. We're not going to get into all that. The point is that in order to live in this state, the average home, $197,000 a year. So, those are some of the higher end, less affordable places. Obviously, if you're kind of in the middle there in the flyover states in the Bible Belt, you're going to see a little bit less of that.
So good old Arkansas.
Now
You got to make 65 grand to live in Arkansas. Maybe you move to Arkansas. I might move to Arkansas. Oklahoma 65, Missouri 66, Kansas 72. There's still affordability out there. Maybe you're moving to Missouri and homesteading. Tennessee's under 100 grand. Alabama, nobody wants to live there.
Colorado. Colorado's a good it's kind of a good mix of the two, where you have like the very, very open rural areas, right? But then you have the urban areas like Denver that are bustling and house values are exploding. So, you kind of see both dynamics there. Although it shows on here that it's extremely expensive. Talking to my brother who lived there, so there's some places that aren't nearly as expensive. So, but yeah, this definitely gives you an idea. What's that?
You can check out the map. We'll stick the link in the bio. But let's wrap up this segment real quick. I just want to go over one thing. Here's a nice little shot of the most expensive versus the least expensive. So most expensive California, least expensive. You got Mississippi in there. So anyway, take a look at it. It's a good article, but there's more to it than what is.
There always is
here. So let's just get into a real quick nuts and bolts here. Got to mention, the study assumes a 20% down payment and a 30-year fixed rate mortgage, calculating the income needed to insure the mortgage payment. They're basing all of these numbers on a 28% debt to income ratio, where for context, to qualify, you can go up to about 46, 45, 50. Not saying it's recommended, but to qualify, if we're talking about qualifying, you can go up much higher than 28%.
Yeah. They're going cookie cutter guidelines, right? Mm-hmm. The perfect borrower, 20% down, right? People, most people probably right now aren't putting 20% down.
Well, I mean, we've gone over it in the previous shows. It's not, they don't put 20% down, but nonetheless.
5%, 10%, 3.5% if you're first-time home buyer, or 3% if you're a first-time home buyer. But either way, and then DTI. I mean, to your point, you could push up to 46. If you're in a government loan, you could probably push that to 50. So they don't take a lot of those things into account. So obviously those income numbers, in terms of what's needed to buy a home in those areas are inflated. But regardless, let's not take away from the fact that affordability obviously is an issue, right? There's no
buying,
that, right? What you need to buy a house now is more than it's ever been. So
right, yes, we're not taking away from that, but the article is slightly misleading. You probably get by and get in a house with a little less. You should talk to us. Buying a new home has certainly become increasingly difficult due to high mortgage rates, elevated home prices, and reduced housing supply. It's harder than ever. Definitely should round back to that. So, that's funny. It's funny that we talked about that this week, because we actually got a bunch of questions pertaining to this very topic. So it's actually a great segue. It's a great segue into our next segment, FAQs, frequently asked questions. The suggestion box The suggestion box down in the lobby is filling up. The text line, it just won't stop. I have to put my phone on silent.
Ringing off the
Voicemails.
hook.
It's like when you call our buddy Pat North of North Furnishings. When you call our hotline, a voicemail box is full and has been for quite some time. And unlike our friend Pat, we will get back to you.
I love how we're just shitting on Patsy right now. God bless him. Love him. Shop North Furnishing.
Okay, so back on topic, affordability. How can one that may not be able to show the income on paper, maybe they have a husband or wife that has a ton of income, but they don't want to move the loan for whatever reason, or they're comfortable with the mortgage payment. The mortgage payment is as much as they currently pay and maintain in rent. So how can we qualify if we can't show that 110,000? What kind of things can we do? How can we help those people?
Yeah.
How can we help?
Yeah.
Help them
So,
get
and it
qualified?
could be a multitude of reasons. To your point, husband or wife, has income, but they have too many debts, or bankruptcy, or foreclosure, or something that's preventing them from being able to be on the loan. Or maybe there is no husband or wife, right? Maybe it's just one person that's looking to buy. So, for those people that want to buy, right, but they're having trouble with affordability, you can always look to have a non-occupying co-borrower, right, on the loan with you, like a family member or friend. Essentially somebody that's willing to sign on to the loan with you to help you get approved, right? Now, this person's basically going to go through the same exact process as you, as the borrower themselves. So, having their credit pulled, income documents like pay stubs, W-2s, they'll go through the entire process. They just essentially won't be living with you in the home at the end of the process. So.
Right. Yeah. So again, it's a non-occupying co-borrower. It's somebody who's going to be a co-borrower on the mortgage. They're going to have their own application right alongside with you, but they're not going to occupy the property. You can do this with FHA and conventional. You can do this at minimum down payments. It is. It's a great way to qualify for a home while it's hard. And then, maybe you can refi the person off down the road when rates come down and the house is more affordable, and you can, on paper, qualify. So we've been seeing a ton of this. They'll have somebody will have a parent who, maybe they want to help their kid get in their first home, and they don't have $100,000 sitting there. So how else can the parent help who wants to? They could go on as this non-occupying co-borrower. And some people may ask, why would somebody do that instead of just waiting until they can qualify on their own?
Yeah.
And
right? It's a great question. Why not just wait? Hey, if you can't buy a house, don't buy a house yet, right? Go rent. That's what you hear people saying all the time.
right.
So
The answer is pretty simple, Al. Values continue to go up. So if you wait, it's only going to get more expensive, and the pressure's only going to grow more and more.
right. Yeah. I mean, not to mention this person, this young person that this parent's helping to buy a house or friend's helping to buy a house, whatever the case may be. They get into that house. They, hopefully get it at the right time. The value goes up. They build up some equity. They get a little bit of financial stability, right? Which obviously, as can go a long way towards buying the next house or using that equity to, take cash out, home equity line of credit, do some home improvements to increase the value even more. The possibilities from there, are endless. So a lot of great points there. And I've had people ask before, isn't that the same as a cosigner? And I say to these people, shut up and stop asking stupid questions. No, it's not the same.
Al's bedside manner is just incredible.
Well, you got to be straightforward with folks, right? I don't come into your car dealership, tell you how to sell me a car, right? The point is, right, a non-occupying co-borrower is still a borrower on the loan. They're still going to have ownership interest in that property, right? You got to keep that
liability.
in mind. And liability. So obviously have the liability. They're on the loan with you, but they also have an ownership interest in the property. Whereas if somebody's a co-signer on something like a car or what have you, they have no ownership interest in that car, right? They're only part of the liability. So if something happens to you or you stop making payments, they go after that. So that's pretty much the biggest difference. That's just a fun little fact for you to throw around at the barbecue this weekend. $10 to anybody who can work that into a conversation.
Yeah, nice, Al. Nice. I'm sure everybody's eager to throw non-occupying Kobar into the conversation at the barbecue this weekend.
I guarantee I'm throwing out $10 bills left and right on Monday.
I'm out of coffee. We're out of segments. That's a good
That's not bad,
show.
though. It's a good show.
It's a good show. It's a solid
It's a good
show.
show. We had a short show this week, folks. Just so you know, we're having a short show, or I'm sorry, an early show this week because Ab Crabman is coming back to Maryland. He's leaving this paradise that he's living in right now for 5 weeks. Is that right, Ab? 5 weeks?
Yes,
5 weeks on
five
the
weeks.
road.
It's going to be intense, but
Yeah.
I'm excited. I am a little worried about my plants. You can see my plants here. I've been taking really good
That's
care
good
of my
plants.
plants. It's a great plant. Look at that plant. I got this baby over here. I got a bunch of I got cactus over there. So I am worried they're probably all going to
Beautiful
die.
setup. Very bong
They're probably
shui.
all going to die.
Very bong shui. Let me ask you this. What are a couple of things that you're looking forward to doing once you get back in town?
I'm looking forward to watching some Orioles games with my family. I'm looking forward to going to Inverness. I'm looking forward to taking some hikes, going down to the Gunpowder, sitting on some. I want to go deep into the woods and sit on a boulder somewhere and really get some thinking done.
Probably
You
alone on
know,
that
just
one, buddy. But
it's just some standard stuff.
yeah,
Yeah, I want
so
to
you're
give a couple
literally
big
just
old.
gonna do the exact same things you did when you lived here, right? That's it. You're
Well,
gonna come back and live
yeah.
your life like you never left.
Yep, and give a couple big hugs, and I want to eat some crabs. I want to sit down with a bunch of people, hopefully a bunch of buddies,
Uh-huh.
have a couple cold beers in a hot outdoor setting where we're just busting up some crabs, eating some crabs, getting your hands all dirty. You know, actually, somebody down here was telling me was trying to pitch me on fish dip, which I think is extremely insane. They smoke fish and turn it into dip. And I'm not for it. And they were saying, "Who eats crab? You eat crab, you weirdo." And I was like, "Well, fish dip is weird and it's crazy, and it's
Are you?
maybe I don't
Is this on purpose? Do
maybe
you know what you're
no,
doing
it's
here?
not. I don't know what I'm doing, but maybe the reason that I'm so turned off by fish dip is because the first time I was introduced to fish dip was down here, and I walked up to this person that was selling fish dip, and their teeth were rotted, and he was like, "You want some fish dip?" And I tried it, and while I was looking at his teeth, and it's no good.
I was down there when you were looking for houses, me and Christine, and we all went out to dinner and we ordered fish dip as an appetizer, and we were the only ones that ate it. Do you not remember this? We
Now that you
order
say it,
we love fish dip. We order fish dip everywhere we go. What the hell is wrong with you?
I'm not. I don't like. Well, anyway, I'm excited to eat some crabs. Drink some local beers that I miss. Key
Yeah,
Brewing
what are some
Company
good
Speed
local beers that you
Wobbles.
man? You Inverness, Big Truck, huh?
Inverness, Moncton Madness. I can't wait for a Moncton Madness. Key
Yeah,
Brewing Company, Speed Wobbles, is like my favorite beer there is. I actually went to a local liquor store here and asked them to try and get it, and they couldn't get it. So looking forward to drinking a bunch of them with a bunch of buddies, and yeah, just doing
that's awesome.
that stuff. Maybe head
I
down to
love
Ocean
that.
City. Go down there, Ocean City, hon.
Danny,
Get some time in get down there,
get
Ocean
down the ocean,
City.
walk on the boards, do a little bike
Yup,
ride on
walk.
the boards in the morning.
Yep.
How great is a bike ride on the boards?
Bike ride on the board's unbelievable. I want to take the kids down there, Camden Yards, catch a game, watch them boys this summer down there at Oral Park at Camden Yards, cheer on the
So
birds.
fun. It's so fun. It's the best place ever. Went to a game last week. Just amazing. Unbelievable experience. You can't beat it. You really can't. Haven't taken the kids yet there. Well, took the baby before I took my 2-year-old, but yeah, so much fun. You're gonna have a
It's very
blast.
yeah. All
So
right. Well, yeah. We're very excited. It's gonna be a great time. We're gonna do all kinds of great stuff.
yeah.
Kids are going
So
to
I think
Genesee Valley camp.
ooh, that's taken. That was us. We did that. Didn't we? We were
Yeah,
at
yeah.
Genesee Valley. We were
Uh
swimming. We were
huh.
doing ropes courses,
The best. They're gonna love it.
playing capture the flag. Man,
Mm-hmm.
God bless America. Miss that. Well, we're looking forward to having you back, Ab. We're looking forward to let's see. You're gonna be there for 5 weeks. We got 2 shows to do while you're home. So I would assume both of those are gonna be live and in person, which is gonna be very fun to do. And maybe we can
Live and in
convince
person.
Ab to move
Yep. We'll have to
back
find a
to
cool
Maryland.
place to do it.
Yeah, that sounds
Yep.
good. Don't
Yep.
say it. Don't say it. All right, folks. It's been a fun one. Thanks for tuning in. Thanks for stopping by June 19th. God bless America, and we'll see you next time.
All right.
Why'd you get lost in the sauce there? Huh?